All right, welcome to our guide on cracking one of the trickiest topics for the LECPA, goodwill and intangible assets. Don't worry though, by the end of this, you're going to have all the cheat codes you need to absolutely ace this section. Okay, let's make this real with a case file. Just imagine a huge local tech company, let's call them Gigacorp, decides to buy a super popular startup, ByteBloom, and they pay a whopping 500 million pesos in cash. It's a massive deal. Everyone's talking about it. But here's where things get interesting. Gigacorp's accountants get to work, they crack open ByteBloom's books, and wait a minute, they only see $100 million worth of stuff they can actually touch, laptops, servers, office chairs. So where in the world did the other $400 million go? That's the big mystery we need to solve. So our first job as financial detectives is to go on a hunt. We're looking for the hidden assets, the things that weren't officially on ByteBloom's books. These are the invisible but incredibly valuable intangible assets that explain why Gigacorp paid such a massive price. So what even is an intangible asset? Well, it's something valuable that you can't physically touch. Now, the official rulebook IAS 38 gives us one key concept to separate it from goodwill, and that word is identifiability. You gotta remember that word. It's our first major clue. So how do we prove an asset is identifiable? It's simple, really. There are two tests, and you only need to pass one of them. First, is it separable? In other words, could you sell it or license it all by itself? If the answer is yes, it's identifiable. Second test, does it come from a contract or some kind of legal right, like a patent? If yes, then boom, it's also identifiable. Easy, right? And just like that, using our two little tests, we've found ByteBloom's hidden treasure. We're talking about their famous brand name, their one-of-a-kind patented software, their huge list of loyal customers, and even some special licensing deals they had. None of this was on their balance sheet, but this is the secret sauce. This is what Gigacorp really paid for. Okay, next level. We've found the hidden assets, but we can't just list them. We've got to put a peso value on them for Gigacorp's new financial statements. And this right here, this is the golden rule from IFRS 3. You have to remember this. When you buy a business, you couldn't care less what it cost them to create an asset. You must use its fair value on the exact day the deal is done. Why? Because fair value tells you what that asset is worth right now, and that's what matters to the new owner. So what's fair value? The easiest way to think about it is, it's the current market price. What would someone who knows what they're doing pay for that brand name or that software code today? That's its fair value. So for our case, let's say the valuation experts come in and say the brand is worth $150 million, the software is a cool $100 million, and the customer list is worth $50 million. You add all that up, and we've just found $300 million in brand new intangible assets. Okay, so we've identified the hidden assets and we've put a price on them. We now have all the pieces of the puzzle to finally calculate that super mysterious thing called goodwill. Now, this is probably the most important thing to remember. You do not calculate goodwill directly. It's what's left over. Think of it as the premium that Gigacorp paid on top of all the assets they could identify and measure. It represents all the cool stuff you can't put a price tag on, like a great reputation, an amazing team, or just the synergy between the two companies. So let's plug in the numbers and solve this thing. Gigacorp paid 500 million pesos. We take away the $100 million in physical assets, and then we take away the $300 million in intangibles we just valued. And what's left? $100 million. That right there is our goodwill. The $400 million mystery is officially solved. But what if Gigacorp got a total steal? What if they actually paid less than the $400 million fair value of all the net assets combined? Well, that's called a bargain purchase. And instead of recording an asset like goodwill, Gigacorp gets to record a gain directly on their income statement. It's basically like getting paid to buy a company. All right, get ready for a classic exam trap. This is where they try to catch you. What happens if you find an intangible asset, it passes the tests, it's definitely there, but you just cannot figure out its fair value? Its price is a total mystery. Well, the rule is pretty simple. If you can't put a reliable price tag on it, you can't recognize it as its own separate asset. Instead, its mystery value just gets absorbed, or subsumed, into the total cost of goodwill. It just becomes part of that leftover number. Okay, deep breath. Let's lock in everything we've talked about with a super fast review.
This is the stuff that's designed to stick in your brain for the LECPA. You ready?
Seriously, take a screenshot of this slide. These are the absolute, non-negotiable rules for your exam. And pay attention to that point about internally generated goodwill. A company can't just decide its own brand is worth 1 billion pesos and put it on the books. Its value has to be proven in a sale. Burn these 6 points into your memory, and you are going to be golden.
And here is your ultimate study hack for the formula. Just remember, G equals C minus N. Goodwill equals the consideration paid minus the fair value of the net identifiable assets. G equals C minus N. Lock it in.
And there you have it, a deep dive into the invisible world of goodwill and intangibles. So we'll leave you with this last thing to think about as you study. If a company's most valuable assets are completely invisible on its own books until someone buys it, what does that really tell us about how we measure what a business is truly worth? Thanks for joining, and good luck with your review.